There's still a lot of volatility in the market, but we're kind of getting used to that. The portfolio went down this week, but you know what? I had some pretty interesting stock sales I think you'll want to take a look at. Also, we had a great week of dividends. And then lastly, my strategy of turbocharging yields through options is beginning to bear fruit. If you want to see the portfolio after this crazy week, stay tuned. Welcome back, everybody. Kevin Burgess here with yet another video. I have this portfolio be transparent because I know some of you are just starting out and you're really wondering how all of this works. So being able to show you all of the pieces to this process, I think is kind of helpful. There's some of you who are further along in the process, and so seeing some of the things that I do give you ideas maybe about what to do or maybe even what not to do. And some of you are in a very similar situation to me where you have recently retired and, you're looking to the future and how to make all of this work. So this is my weekly update. And with that, let's go ahead and get started. If you're new to the channel, just wanted to update you. I actually split my dividend growth portfolio into two different portfolios. One is what I call the growth portfolio, which is a portfolio of stocks with higher dividend growth and most likely lower yield. So I'm looking at that for income in the future. I don't need that income currently. And then I have a portfolio of stocks that are focused on higher yields and most likely lower dividend growth. So it's providing current income for me to actually live on. Dividend increases, there are no additional ones. I do still have the ones year to date on here. You can kind of see those. We've had some pretty decent ones year to date, but we don't have any additional. I've updated this portfolio update chart, and I think it's going to give you a lot more information. It also reduces the number of slides that I have, so I think it's going to be more efficient for both of us. I've added on here what the portfolio balance was last week and also at the end of, or at the beginning of the year. And you can see that for the week, the portfolio is down by almost $24,000, $23,827. You can see the components that make this up. To the right here, there's really four of them. Any changes to the portfolio would be related to either dividends, any options transactions that I've closed, any funding that I do. So if I contribute money to the accounts, and then there's a market change, and that's basically related to the prices of the stocks that I hold. So if the prices go down, the portfolio goes down. If the prices go up, they go up. So you can see that for the week, the market went down. The market value of my portfolios went down $25,000, 3.1% on the week. You compare that to the S&P 500, which is just a couple of lines below that. It went down 2.9%. So overall for the week, we underperformed the S&P 500 by 0.2%. We'd love for that to be a little better, but it's okay for this week. You'll notice that the dividends for this week are $1,113.88. So that's really a great week of dividends. Lastly, you'll see that the closed options transactions added $150 to the portfolio. So one way to look at this is that the $150 of options is roughly about 26% of the dividends that I received for the week. So, one could say that my dividends are about 26% higher than they would have normally been had I not started this turbocharge yield project. So then moving on to year to date, you see that the portfolio is up by $40,000. Most of that, actually more than that, is from funding. So we know that I put $42,400 into the yield account year to date. That makes up more than this. So we've gotten about $4,910 or so in dividends, about $333 in options. So the remaining value is the market change on the portfolios. You'll see that overall went down $7,353. The dividend yield account actually is up by $13,139 or 7.7%. And I think really what that means is there's a lot of flight to quality at the moment as people are trying to find safer places to invest their money. The dividend growth portfolio is down 3.5%. Or $20,000. So therefore, the overall, we're down 1%, 1.0%, which is $7,353. And compared to the S&P 500, which is down year to date 11.8%, we are still outperforming the S&P by 10.8% year to date. This is a slide that shows, and I'm pointing out here both my yield on cost as well as my dividend yield. When I invested in the shares that I have in my yield portfolio, I was getting about 5.28%, 5.3%, let's just round it. Currently, if I were to buy the same basket of stocks for my high yield dividend portfolio, I would only be getting 4.44%. Why is that? It's because the stocks have gone up. As you can see back here, our stocks are up 7.7%. $13,139. So the dividend yield would actually be lower if I invested the same $228,751 today that I've invested, up to this point. So it's important to point out that these higher prices are actually making it more difficult for my yield portfolio because I'm looking for higher yield stocks. So creates a little bit of a dilemma and something that I need to focus on in this next week. In the yield portfolio, we have shares purchased in March. I did not buy any shares in the yield portfolio this week. I did sell a couple though, and I think those are going to be interesting for you. I sold 10 shares of Lockheed Martin. I sold 30 shares of Chevron, and it's not because I don't like Chevron or Lockheed Martin. I still have plenty of shares in both of those companies. My intent here was to sell shares to raise capital to fund my covered put strategy. You can see down further on the slide that the cash reserved for secured puts is $12,200. I'll go through the details on that in a little bit, and that I have cash to invest of $7,555. So we'll be looking for a home for that, whether it's either purchasing shares or entering into some cash secured puts. Here's the turbocharged yield update. This is a chart that shows the stocks that I have purchased options related to. And you can see that the yield, overall yield on cost for this basket of stocks within my yield portfolio is 4.73%. The closed options year to date for these are $303.60, which is a 0.26% boost to the yield. So 4.73 plus 0.26 actually puts me for this basket of stocks around almost a 5% yield. You'll also notice at the bottom that there was a put, a cash secured put that I entered into last week. It expired unassigned. And so therefore I don't give the stock credit. It happens to be Pinnacle West. I don't give Pinnacle West credit for that. That was actually a cash reserve of $6,500 because I sold the put with a strike price of $65. So the brokerage firm reserves that $6,500 in case they get assigned. So, I got $29.28 for that. The average annualized dollars was 142. So it was $6,500 for some number of days. Let's just say it was like 18 or 20 days, something like that. That's an annualized yield of 20.6%. So I'm pretty happy about that as well. So this turbocharged yield strategy is beginning to pay off. So what positions do I still have open from an options perspective? I have 3. I have an open call for New Jersey Resources. It expires on April the 14th. I have 2 open puts. Both of those puts expire on 3/18. If these puts go to expiration and expire worthless, then the annualized yield for the Pinnacle West transaction would be 22.8%, and the Verizon transaction would be 26.8%. Those are some pretty high yields. So, and also with these two stocks, I am perfectly happy buying those into my portfolio at those prices. So that's it currently for the open options position. And dividends received this week, there were three. Chevron on March the 10th was $241.40. IBM also on the 10th was $155.80, while Prudential came in on the 11th at $168. In the growth portfolio, there was not a lot of activity here. I didn't buy any shares, I didn't sell any shares, and I still have the same $17,068 to invest in the growth portfolio. We did get 4 dividends. Atmos Energy was $136.49 on the 7th. On the 8th, Johnson & Johnson came in at $192.04. On the 10th, Microsoft at $77.68. And also on the 10th was Snap-on at $142.47. So that wraps up the portfolio for this week. What I'd like to share with you are what are my plans for this week. My plans for this week are to keep an eye on Jerome Powell's news conference that's going to be on Wednesday. Seems to me like they've been flirting with these discount rate raises. I think he took a beating in Congress, over the last couple of weeks. So he is probably going to be more interested in raising those rates. We'll have to see where he comes in, but that could be something that drives the market one way or the other. So probably be not doing too much until we see what's going to happen on Wednesday. I will be looking for deeply discounted growth opportunities to invest that $17,000 that I have left. I also want to build a larger portfolio of open options positions. I have to look at, due to the volatility, whether I do that earlier in the week or later in the week, but that's going to be something that I'm looking at this week. I'm also researching potential higher yielding stocks to add to the yield portfolio. One that I'm looking at is Realty Income, which is a REIT, and I typically don't invest in REITs. But, it's not looking too bad. So I'm going to continue to look at that this week. I'm not going to make any rash decisions, but I will, hopefully find, a stock or two to invest in from a yield perspective. This channel is about building streams of passive income that pay our bills so that we can live a life of personal freedom. I'm glad you joined me today. If you like the content of this video, if you wouldn't mind giving it a thumbs up, others would know that there's good content in this video. And if this is a journey you want to be on and you are interested in dividend growth investing, consider subscribing to the channel. I'd love to have you along as I share transparently this portfolio with you. And with that, I'll see you on the next video.